Good afternoon and welcome to the April webinar, Unlocking Financial Expertise, Navigating CE Requirements. My name is Julie Mendel and I'm the Education Trustee for the SILA Foundation. Before introducing today's amazing panel of speakers, I have just a few housekeeping items. This webinar is 1 hour in length and is being recorded. Within the next week, you'll receive a link to the recording and a post-webinar survey, and we would really appreciate you filling that out. Please mute your microphones, turn off your video so that the focus can stay on our speakers. We ask that you put your questions in the chat box. We will be monitoring and posing those questions to the speakers on your behalf. We will answer as many questions as we can in the time we have available. We will be taking breaks between speakers since we have 3 speakers this afternoon, so you can ask your questions throughout the program. Today we have a panel of industry leaders who all sit on the SILA Board of Directors. Deb Fabritz is the Director of Professional Registration and Compliance for the Wisconsin Division of Securities. She received her law degree from DePaul University and MBA from the University of Wisconsin. Before joining the Division of Securities, she worked as Associate General Counsel for a broker-dealer. She's the co-chair of the NASA IAR CE Committee, co-chair of the Broker-Dealer Investment Products and Services Project Group, and is a member of the Broker-Dealer Continuing Education Project Group. In addition to being a SILA board member, she sits on the SILA Securities Steering Committee. April Gaskin is a licensing senior manager with Commonwealth Financial Network. She started at Commonwealth in 2010, transitioned to licensing manager in 2013, and senior licensing manager in 2019. She leads the advisor and corporate licensing and continuing education efforts. April graduated from Boston College and holds the FINRA SIE, Series 99, Series 7, and Series 24 registrations. She's a member of FINRA's Licensing and Registration Committee, and like Deb, is a member of the SILA Securities Steering Committee and the SILA Board of Directors. Brandy Brown is the Executive Vice President of Regulatory Affairs at Reg Ed, and she oversees the legislative and regulatory intelligence for various financial services compliance products and services. She has more than 20 years of experience in licensing and registration regulation, education and training requirements, and practical application of rules for broker-dealers, investment advisors, agencies, carriers, producers, and adjusters. She also holds a SILA A designation and serves as the education chair on the SILA Board of Directors. Please join me in welcoming today's speakers to our virtual webinar stage. Deb, go ahead and take it away.
Okay, good afternoon. In the first part of our presentation, I'll be covering continuing education for investment advisor representatives as well as the exam validity program. You may be somewhat familiar with the CE requirements, but I'm going to run through them. Next slide, please. Before looking more closely at the impact of CE deficiencies and withdrawals of registration from CE states. So the CE program, which began a few years ago, applies to all IARs, whether they're registered with the state registered investment advisor or an SEC registered advisor. It requires that on an annual basis, each IAR obtains 12 credits that are divided equally between products and practice and ethics and professional responsibility. The credits do not ever carry forward into a future year, but if someone is missing credits from a past year, the credits will first fill into that year before getting added to the current year. For duly registered reps, the FINRA regulatory element counts for the 6 credits of products and practice. This is a nice benefit for duly registered reps. It requires, though, that somebody, either the individual or the firm, pay the $3 per credit roster reporting fee. Sometimes we'll get inquiries from people who are looking at their IAR CE record, and they say, well, I did the regulatory element, why is it not showing there? And almost always it's because someone didn't pay the roster fee. Courses need to, of course, be approved and to be completed through a CE provider that has been approved for the program. We have a very long list of CE providers on our NASA website. Some firms probably choose to use a particular provider, and that may make it easier than sifting through the whole list. We are hoping in the future at some point to have a catalog where individuals can search by topic, and then once they find a type of course they would like to take, it has a link to a provider. And anyone can be a CE provider. That's not a difficult process. The applications are submitted through the NASA website. Since this is a national program, no one needs to submit anything to the states. The CE providers submit the rosters of IARs to FINRA, and then IARs can monitor their courses and make sure that they've been reported by going to FinPro. FinPro was not always available to IARs. That's a new development, and we are very much encouraging all of our IARs who don't yet have one to open a FinPro account. It can also help them avoid duplicating a course, since if you take a course that is the same as a prior course with the same course ID, that will not count. Next slide, please. So something new with the CE program is that everybody has both a CE status and a registration status. So CRD will show whether or not an individual is required to complete CE. And as you can see from the first 3 lines, so long as somebody is either doesn't need to do CE or they're in compliance, their registration status will remain at approved. However, if someone is missing CE for 1 year, then their CE status changes to CE inactive, and the registration status still says approved, but pending IAR CE. And the reason that additional language was added on there was so that regulators and firms could more easily track those folks who were CE inactive. For instance, you can run a report that shows the registration status, and you'll see the approved pending IAR CE. If someone is missing their CE for 2 years in a row, well, then they're going to fail to renew in all of the states that require a CE. Their CE status will now be failed to renew, and their registration status is failed to renew. This year, 2024, was the first year that IARs could fail to renew. And we certainly did see that happen, but fortunately the numbers were relatively low. We had a handful of IARs in Wisconsin who are at risk of failing to renew, but fortunately before the end of the year, they did complete all of their CE. We had some IARs located outside of our state that did fail to renew, and we sent them letters pointing out that, hey, you failed to renew in our state because you didn't do CE, you're no longer registered, you cannot do business, and so on. And then we also reached out to firms who had CE inactive reps at the beginning of the year and gave them a list of those folks so that they could hopefully get after that. Next slide. So here we're looking at the difference between CE inactive and failed to renew. Someone who is CE inactive is still approved to do business, but they should definitely be catching up on their CE for the last year and then get current. When they do that, their CE status, as well as their registration status, will automatically update. But being CE inactive is something, as I show on the slide, that you should watch out for if you're applying to a state that requires CE. For instance, in Wisconsin, if we have an IAR in our manual queue and we see that the person is CE inactive, we're going to ask them to get caught up on their CE before we approve them. We would much rather hold back on the approval than to be chasing after them at the end of the year because they are not going to be able to renew. at the beginning of the year, we took a look at how many IARs we have that are CE inactive, or actually it was more recently than beginning of the year. We had a couple hundred, and about half of those were within our state. So we'll continue to monitor that. And you may notice that other states are also in communication with you regarding reps that are now CE inactive. If someone fails to renew because they're missing 2 years of continuing education, their registration again will terminate in all CE states. And if they'd like to be registered in a CE state, they of course have to catch up on the CE. But the statuses do not automatically update. They do need to file a U4 and apply to be registered once again. There are a couple of things to keep an eye on here. If an IAR is located in a state that does not require CE, and because they were registered in CE states and they failed to renew because they didn't do the CE for a couple of years, if their home state adopts and goes effective, as soon as the state goes effective, the registration of that IAR will actually terminate. This can have kind of a domino effect because you have states that don't require CE, but they do require that you're registered in your home state. So a couple of things to watch out for there. Next slide, please. Oops, yeah, no, back one, thanks. So especially when the program started out in 2022 with the first 3 states, there was some confusion or misunderstanding about whether someone could withdraw from a state to avoid the CE requirement. And in fact, once an IAR is required to do CE, they are basically in the program indefinitely. And even if they're not registered in any CE state, they'll still have that record that shows that they either need to do CE or they're missing CE credits. Recently, we had kind of a funny saying based on the Eagles song that, welcome to the Hotel California. You can check out at any time you like, but you can never leave. So just something to remember. And if there are questions from someone who says, well, I'm not now registered in any CE state, why do I need to do CE? The response is that you enter the program and then you stay in the program. The reason it is set up that way is because someone could otherwise totally work the system. They could get toward the end of the year, they could withdraw, and then at the beginning of the following year, they could apply again. And when you apply a few days into the new year, you don't actually have the CE requirement until the following year. So if someone kept withdrawing and reapplying, they would technically never have to do CE. So we have structured the program so that will not happen that way. As a practical matter, if someone is no longer registered, they were registered in a CE state and they no longer are, they can let those missing CE credits simply accumulate and just be careful if their home state were then to adopt, or they, if they want to re-register in a CE state, they would need to catch up. We did put a cap on it so that say you went 5 years without doing CE, you're not going to accumulate that many credits, 5 times 12. At most, you would need to do 24 before applying and then do the 12 in the current year. And of course, somebody also always has the option of retesting instead of catching up their CE. Next.
Doug, along that lines, we do have a question in the chat. If the registration terminates, in addition to catching up on CE, must the individual retake the appropriate NASA exam?
No, it's one or the other. You either catch up with your CE or you take the exam.
Okay, great. And everybody, this is a great time as we start to close in on the end of the first section. If you do have questions, go ahead and put them in the chat so we can address them once Deb wraps up.
Okay, well, I have just a few more slides, so I think I will speed those along. As you can see, we have 18 states that require CE. That's 42% of all IARs. So far for 2025, we only have the U.S. Virgin Islands going effective, but there are definitely other states that are in the process of adopting legislation requiring CE. Nebraska is well on their way. And then Minnesota is also proposing CE with an effective date of 2025. Next slide. The exam validity extension program is sort of like MQP, but for the state exams. And we have two versions, one on the agent side and one for IARs. We have not seen a great deal of adoption of that. It will be coming in the future. So far, agent and IAR EVEP have been adopted by Florida, Mississippi, and South Carolina, and then agent EVEP by Minnesota. If a state has not yet adopted EVEP, and I think eventually most of them will, one thing to explore is whether they will waive an exam deficiency. And in Wisconsin, we definitely plan to do that. Next slide. This is just a screenshot of the NASA website under industry resources. In the middle of the page, you'll see it says IARCE resources. That's a good place to go. There are FAQs and resources both for IARs and CE providers. Up on the right-hand corner of the page, there's also a box, IAR Continuing Education, which will get you there as well. And under exams, that's where you find the EVEP resources. Next slide. And the last thing that I will comment on is the states are using various forms of outreach, such as those shown on the slide. We do communicate primarily with the firms because we do not have email addresses for individuals. So we really hope that the firms are distributing that information once they get it. And then I've listed some resources for you and look forward to any questions.
Okay, I'm not seeing any additional questions at this time. Just a reminder, you put your questions in at any time. We should have some time at the end as well if something pops into your mind. But got any questions? I think we can move on to April.
April, you're muted.
Okay, thank you. Thanks, Julie. I'm going to provide an overview of the Securities Continuing Education Rule, requirements, and recent changes. Next slide, please. FINRA Rule 1240 outlines the requirements regarding the continuing education of registered persons. The rule also sets forth a CE program through which eligible individuals may maintain their qualification in a representative or principal category following the termination of that registered category. This is called the MQP, and we will discuss this in more detail a little later. FINRA, in conjunction with other self-regulatory organizations and the Securities Industry Registry Council on Continuing Education, administers the continuing education program for the securities industry. The rule breaks CE down into two mandatory programs, regulatory element and firm element. Next slide. First, we will discuss the regulatory element. Regulatory courses for the regulatory element focus on new and amended rules, industry trends, and core knowledge areas relevant to each registration category and are assigned to the rep based on what registrations they hold. Therefore, the number of sessions required for completion will vary on the number of registrations the individual holds. Rule 1240 requires registered persons to complete the regulatory element annually by December 31st. Please note, since the completion of this requirement annually is fairly new, many firms have opted to choose a different deadline for this training. This is done in an effort to spread out requirements and make training less cumbersome for registered reps to adhere to. It also makes it easier for registration departments to track completions. Training must be completed via the registered rep's FinPro account. However, there are accommodations available if necessary that you can apply for. Participants or firms may choose to apply for accommodations by using a reader, a recorder, or both. If accommodations beyond these are needed, you can contact FINRA's accommodation team to make appropriate provisions. You can check if a registered rep has a FinPro account and the last time they accessed this account by viewing the rep's FINRA profile. This is a helpful tool as completion deadlines approach, as well as inform you who you need to reach out to ahead of time to set up a FinPro account to make sure that they meet the deadline. Firms also have access to reports in FINRA Gateway to assist with tracking the CE status of registered individuals. These reports show which individuals have begun and completed CE, as well as individual CE status, and can be accessed real-time, including during FINRA's year-end shutdown period. The templates can be modified to fit your firm's needs. Failure to complete regulatory CE by December 31st will result in registration becoming inactive. This means that you may not engage in any or be compensated for any securities actions that require a registration until you have satisfied these requirements. Next slide. Now we'll talk about the firm element requirement. The intention of the firm element program is to enhance securities knowledge, skill, and professionalism. Firms must establish and maintain an annual training plan for its registered persons. This plan, referred to as the firm element needs and analysis plan, must be evaluated annually and must detail your firm's training needs. Firms' plans must take into consideration the size, structure, and scope of business of your firm. The program must also take into consideration regulatory developments relevant to your firm and registered reps. Firms must maintain and document the content and completion of this program and should be prepared to present this documentation to a regulator if requested. FINRA and the CE Council have developed resources and guidance to support firms in designing their education and training programs. These resources include the CE Transformation Toolkit, CE Council publications, and the CE Content Catalog. Links to these resources can be found on a later slide. Next slide, please. So what's sort of new with the regulatory requirement? On January 1st, 2023, it became required for all registered persons to complete the CE regulatory element annually, and FINRA now bases the sessions assigned on the registrations the individual holds. The cost of the regulatory training was reduced from $55 to $18. Requiring the training annually instead of every 2 years and basing the sessions on the registrations an individual holds enables the training to be more relevant, up to date, and able to be incorporated into a firm's annual training plan. To assist with incorporating regulatory element into a firm's training plan, FINRA and the CE Council now publish the learning topics for each registration category by October 1st of the prior year. So that means the learning topics being covered in the 2024 regulatory element were published on October 1st, 2023. FINRA provides a tool to see what topics are assigned to each registration category in the desired calendar year. This enables a firm sufficient time to review and determine how to incorporate these topics into their annual training plan. This may include providing firm-specific information on the topics included or selecting different topics from those in the regulatory element since they're already being covered. Another sort of new item, effective June 30th, 2022, firms have the option to opt into a new firm setting in FINRA Gateway to automatically apply regulatory CE to associated individuals who also have an IAR CE requirement. As Deb was talking about in her presentation, regulatory CE satisfies the 6 credits of IAR products and practices requirement, but you have to file it. If this setting is turned on, it will automatically file the regulatory CE as IAR CE and charge the firm the filing fee. FINRA also made some additional updates to help track the new annual requirement of regulatory element. Firms can enable an optional feature in firms' gateway firm settings to send regulatory CE reminders. Once enabled, registered securities professionals with FinPro accounts will receive auto-generated email reminders about their regulatory element requirement to the email address that they have added to their FinPro account. Keep in mind that you can change the due date on these reminders to accommodate an earlier deadline if your firm has chosen one. Effective April 5th, 2022, firms can use the notifications tracking report in FINRA Gateway to monitor these regulatory CE auto-generated email notifications. This report includes a lot of data that firms requested, including which email addresses the notification was sent to, the email and the subject of the email in the notification, the date the notification was sent, and the date an email notification was opened. This can be helpful to ensure and document that the registered rep has been informed of the requirement and has received reminders to complete, eliminating them from being able to say they didn't know about it. Next slide. And what's sort of new with the firm element requirement? As of January 1st, 2023, FINRA has amended the CE rules to extend the annual firm element requirements to all registered persons, including individuals who solely maintain a permissive registration pursuant to 1210.02. This means that all registered reps are now required to complete the annual firm element requirement. In conjunction with this change, FINRA has also amended the CE rules to allow firms to consider training related to anti-money laundering under the compliance program under Rule 30 through 310E and the annual compliance meeting under Rule 3110A7 towards satisfying an individual's annual firm element requirement. Therefore, you can develop your training plan if it fits with your firm's training needs so that registered reps that hold permissive registrations meet the firm element requirement by completing their AML training and attending the ACM. FINRA and the CE Council are also working on ways to improve the guidance and resources available to firms to assist with developing an effective firm element training program. As part of these enhancements, FINRA and the CE Council are in the process of developing a catalog of CE content that will serve as an optional resource for firms to select relevant firm element content and create learning plans for their registered persons. The catalog will include content developed by third-party training providers, FINRA, and other SRO participants. Firms will have the option of using content in the catalog for purposes of the firm element training. Next slide. And finally, back to the MQP, the Maintaining Qualification Program. This program provides eligible individuals who terminate their representative or principal registrations with the option to maintain their qualifications for these registrations by completing annual CE. MQP provides individuals who choose this option a maximum of 5 years in which to re-register with a member firm without having to requalify by exam or having to obtain a waiver. The rule change does not eliminate the 2-year qualification termination period. Rather, it provides participants with an alternative means of staying current on their regulatory and securities knowledge for up to 5 years following the termination of their registrations. To be eligible for the MQP, individuals must have been registered in the terminated registered category for at least 1 year immediately prior to the termination of that category. They must enter within 2 years from the date of termination of the eligible registrations, and they must complete all CE requirements by their due dates. Participation in MQP will not be allowed if an individual has been CE inactive for 2 consecutive years or become CE inactive for 2 consecutive years during their participation. They also will not be allowed if an individual is subject to a statutory disqualification during the 1 year immediately prior to the termination of the registration category, or becomes subject to a statutory disqualification during their participation in the MQP program. If either of these events occur before or after an individual's participation in the MQP, they will not be eligible to participate or continue to participate. Enrollment in the MQP is done via your FinPro account. If you are eligible to participate in the MQP, when you log into your FinPro account, a prompt will inform you of which qualifications you are eligible to maintain. Firms are encouraged to communicate this to their securities professionals when they terminate registrations. Next slide. That's the end of this portion of the presentation. As mentioned, here are the links to some resources designed to help your firm's CE program. Any questions?
Thank you. Yeah, thank you, April. I don't see any questions in the chat just yet. I do want to remind everybody on the call that when you get the link to the recording, you will also get a PDF to the presentation, so you don't have to write these links down. so you'll get them. You'll get a link to them within the next week. Since we don't have any questions, let's move on to Brandy.
All right. Good afternoon, everyone. I am going to focus on insurance continuing education and the annuity best interest training that was new in 2020. So if we go to the next slide, the first section, we're going to talk about insurance CE. And this section is based on the National Association of Insurance Commissioners State Licensing Handbook, their Producer Licensing Model Act, the Uniform Standards, Licensing Standards, and the guidelines adopted by the Producer Licensing Task Force and its working groups. So the purpose of these documents was to create uniformity across the states, since insurance is regulated at the state level. And while these are NAIC resources, there are still some states that have not adopted various parts of these models. So there is still push for uniformity across the states and in some of these areas. Next slide, please. Okay, so the CE credit requirement. So under the Uniform Licensing Standards, the requirement is 24 credits of CE with 3 credits in ethics. And this is each biennial compliance period, which is every 2 years. The 50 minutes is equal to 1 credit hour of CE. And for classroom or webinar, that is, 50 minutes equals the 1 credit of CE. For self-study, there is a word count formula that the NAIC has published that that calculates how many credit hours, but it is also based on a 50-minute credit hour. And then, if applicable, the CE compliance period should coincide with the license renewal. This is, again, what is in the Uniform Licensing Standards. And then, for the most part, the perpetual license states are still adopting the 2-year CE compliance period, even though they have perpetual licenses. And then it also says that the license term should be tied to the birth date or birth month every 2 years. Next slide, please. For the CE and the lines of authority, so CE is required for the 6 major lines of authority that is contained in the Producer Licensing Model Act. So in the Producer Licensing Model Act, it does say that it is not required for each LOA or license type that's held. So for example, if a producer holds a life and property LOA, the CE requirement is still for 24 hours, not 48. And generally, not always, but generally, CE is not required for the limited lines of authority. Next slide. And then the subject areas for CE and the approvable topics. So it does say that states may limit subject area requirements And really what this means is that some states require producers to complete courses that apply to their LOAs or license types only, plus the ethics credits. And then I would say that for the most part, most states approve courses as general and ethics credits. So the producer can take whichever courses they would like that are approved for general credit, plus the 3 in ethics to equal their 24 hours of CE. For the approvable topics, it does say that some states prohibit CE credit for training on sales techniques. I would say that that is in the majority true for just about all the states. And as part of this, the NESC did adopt and publish a list of recommended approved and not approved topics for CE credit. That was adopted in 2018, and that information can be found on the NESC website. I can certainly provide the link to that document as well after the session. Next slide. For CE and course repetition. So producers are not permitted to complete a course for credit more than once during the same compliance period or license continuation period. Most states say that they may repeat courses for credits in successive renewal terms. So if they can't complete it, the same course in this renewal term, but they may complete that same course the next one. But there are some outliers there. New York is one of those where their rule is actually you can never repeat a course. So that's a little bit different than most states and what's in the NESC documents. Next slide. For C exemptions and waivers, the PLMA, the Producer Licensing Model Act, and the Uniform Licensing Standards, they both contain 2 exemptions for CE requirements. One is the inability to comply due to military service. Another one is demonstration of an extenuating circumstance, such as a medical disability. And then as you know, kind of outliers from the NESC documents, some states do still grant exemptions based on years licensed or age. So that's also there. And then for waivers, some states accept waivers for professional designation. So if the producer holds a professional designation, in some states, they do allow you to apply for a waiver of your CE requirements, for your producer CE requirements. And then some states allow CE credits for filed and approved courses used to obtain and maintain their professional designation. Next slide, please. And then for non-resident CE reciprocity in the Producer Licensing Model Act, it says the non-resident state accepts the producer's satisfaction of the home state requirements. I think that that is almost 100% true for producer licensing. Adjuster licensing is a different ball of wax, but for producer licensing, that is true. Next slide. Okay, now in this section, we're going to get into the annuity best interest training. It is based on the NESC suitability in annuity transactions model regulation. And the best interest training is based on the 2020 version. There was a 2010 version that said that there's a suitability standard of conduct for annuity sales. The 2020 version lifted that standard of conduct from suitability to the best interest standard. So that's what we're going to be talking about today. The best interest standard training courses must be offered by an insurance department approved continuing education provider. It must be approved. The course must be approved by an insurance department. So those who have already received annuity suitability training under the 2010 version, the 4-hour, are required to take a 1-hour course on the best interest standard. So instead of require them to take another 4-hour version, if they've already completed the 4-hour suitability training, in the model, it allows them to take a 1 hour based on the best interest standard. But in the model, it is allowed for a limited time for 6 months in a model regulation. So 6 months after the effective date, they need to take that 1 hour credit training course to be able to continue to sell annuities. Or if that 6-month window has passed, then they have to take the 4-hour best interest training. But we have found that if states adopt the model, sometime this time frame may vary by state. Some states, most of them are doing the 6 months. I have seen some states do 1 year, that they have 1 year to take the 1-hour course. And then those that are new to selling annuities would be required to take a new course on the best interest standard. Again, that's a 4-hour course, and the general annuities content before selling annuity products. And the insurer must provide product specific training. So that is all the information that is in the model regarding training from the NEIC. So if we go to the next slide, you can see the heat map here where the states have adopted. So those that are in light purple have adopted already. We've got 2 states that are pending right now, and then we've got 2 states that are not adopted or pending. But I do know that Louisiana has said that they are working on drafting their regulation now. So they are close as well. I would just say at this point, what an amazing job that the state regulators have done in adopting the 2020 version. As you can see, almost every state has either adopted or has some legislation or regulation pending to adopt. And that's, within 4 years. The previous version, the 2010 version, it took, almost a decade for the states to be able to adopt. And at that point, not all states even adopted. So in this version, the 2020 version, the states really have done a fantastic job of adopting. All right, next slide. All right, and then I just wanted to highlight some of the states that have some recent adoptions. So effective January 1st of this year, we had Florida, Oregon, Kansas, Tennessee, and Washington. And then I just made a note for Florida that training is new in Florida. So what that means, though, is that Florida previously had their annuity training, annuity suitability training in their 5-hour update course. But now they have passed the NEIC model. So that's in line with the model now. So there is a 4-hour course that's not included in the update course, the Florida update course. New Hampshire is effective February 16th of this year. And I'll have another slide on New Hampshire, so we'll come back to that because there's a lot of information about New Hampshire that I want to go over. And then effective July 1st will be Indiana and Utah. And then Utah is one of those states that allowed the 1-year grace period for existing producers. And training is new in Utah, which means that they did not adopt the suitability standard that was based on the 2010 model. So it is completely new for them. So all these Utah producers are new to taking annuity training, and they will be taking the best interest standard training. Effective July 5th will be Vermont. Again, that's the same as Utah, that it is new in Vermont. So they'll be taking the best interest standard. Effective January 1st, 2025 will be California, which obviously is a big state. And I've got another slide on California because they not only have updates to their annuity training requirements, they also are establishing training requirements for producers selling life products, which is similar to the to New York, where New York has the New York Reg 187 requiring training for those selling life products as well. And then we have two states that are pending state adoption, Nevada and Missouri. Nevada's original proposal really proposed more of a fiduciary standard, and they got a lot of pushback from industry. And from my understanding, their most recent proposal that they're working on is expected to be amended to fall more in line with the model. So more with the best interest standard instead of a fiduciary standard. And then Missouri, a public hearing was held on March 20th. And their proposal does contain a 7/31 effective date in the training section. Next slide, please. Okay, this is a slide that's just on New Hampshire, and I wanted to call it out because it is a little different. It does follow the NAIC model. However, it was effective on January 1st. But since that is when that was what was written into the rule, that was be effective January 1st. However, it wasn't actually adopted until February 16th. So they're giving some additional guidance to carriers and giving some additional kind of grace periods for producers as well. So producers licensed prior to February 16th and completed annuity training, the annuity suitability prior to 1/1 have until August 16th to complete training. So that is a little bit different. And then those producers that are licensed on or after February 16th have to take the new 4-hour course before selling annuities. They do allow reciprocity, and again, this with the standard of the insurers must provide product-specific training. Probably the most important thing to note here is that they have a grace period for the carriers because they pushed the enforcement date back to April 17th because the regulation did not allow for time for implementation. So they are offering a grace period, and they did publish a bulletin that contains this information. So during this grace period, the department will not take enforcement action against carriers for non-compliance of these new requirements. Next slide, please. And this is the slide that is dedicated just to California. As I mentioned earlier, California is a little different in that, well, they were different before with the suitability standard because instead of the 4-hour course that follows the model, they had 8 hours of credit for California annuity training and then 4 hours of ongoing training every 2 years. So they're different in the annuity training. And they also are starting to require training for those life producers that are selling life insurance policies other than term life with no cash value. So for the California life training, it says it's operative on January 1st, 2025. But what we understand is that life agents licensed after January 1st of this year are to complete the 4-hour life course before soliciting life products. So even though the effective date is January 1st, 2025, we are hearing from the department that newly licensed life agents are encouraged to complete life insurance policies 4-hour course as soon as the courses become available in 2024. And this training applies to, just like the annuity training, applies to both residents and non-residents. And what we are understanding too is that California is still working on their outlines. So California courses, both for life training and annuity training, must follow the California state specific outlines. So far for the life training, since that they need to start taking, producers need to start taking courses right away. The department has held 2 subcommittee meetings thus far to review the draft outlines for the life training course. The next meeting is scheduled for April 30th. So hopefully they'll finalize the life training outline so that CE providers can get their courses written and submitted and approved, and producers can start taking those courses. And then we understand that the annuity training course outlines will follow after that for the best interest training for annuities. And then it's important to note too that the California annuity training is not reciprocal with other states because the other states that follow the model have the 4-hour requirement and the 1 hour or the 1 hour if they've already taken suitability training. And this is an 8-hour initial training for selling annuities and a 4-hour ongoing training every 2 years. So they are not reciprocal with other states. I do know that in the previous version of the California annuity training based on the suitability standard, other states would be reciprocal with California because, you know, instead of taking the 4-hour course for California, they're taking an 8-hour course and then 4 credits every 2 years after that. But it's a one-way reciprocity. California will not accept completion of courses other than their courses based on their outlines. And then product-specific training is required as well. And I believe that is the end of my presentation. And I'll be happy to take questions.
Okay, thank you, Brandy. We did have a question, but as soon as the question was asked, you answered it. So, so great job there. I'm not seeing any additional questions, and we're coming up on the end of our time. So I just want to thank all 3 of you ladies for sharing your expertise with us. This topic, continuing education, is so important for all segments of our industry. And I also want to thank you for being such good friends to SILA and the SILA Foundation. We really do appreciate you and all of your time and preparation for this afternoon. As a reminder to everyone else, our webinars are free of charge. They are open to the public. We appreciate you sharing our invitations. I'd like to remind you to watch for and complete the post-webinar survey and plan on joining us in May for a discussion on surplus lines. Thank you, everyone.
Thank you.
Thank you.
Thank you.